Hello, my name is Matthew Granger and this is the FCTO Weekly Review and Outlook for the week of July the 29th, 2012. European officials turned the tide in market sentiment last week. Spanish 10-year yield reached a new record high at 7.751%, and just as it looked like yield is heading to 8%, the European Central Bank President Draghi stepped in with a strong pledge and turned things around. Spanish 10-year yield closed at 6.744%, a 4% below the historical high, and is now below the 7% unsustainable level. Italian 10-year yield also followed and closed at 5.956%, below the 6% level. Euro-US dollar successfully defended the 1.2 psychological level and reversed, while US dollar Swiss franc also reversed ahead of parity. Rally in stocks was equally impressive as the Dow broke through the 13,000 psychological level to close the week at 13,075 and is now set to take on the 2012 high of 13,297. Technically, Euro-US dollar should have at least made a short-term bottom at 1.2042, and 1.2 looks safe for near-term. Sterling US dollar also looked set to head back to 1.59. The US dollar Canadian dollar fall now opened up deeper decline through parity. Meanwhile, Aussie dollar US dollar extended its rally and is heading back to 1.07. Yen crosses including Euro Yen and Sterling Yen should bottom in the near term and more upside is anticipated. Nonetheless, Euro Sterling's recovery last week looks corrective and we're still bearish on the cross. A similar picture is seen in Euro Canadian dollar and there is no change in the near term bearish outlook in the cross. Euro Aussie dollar's price action also looked corrective, and indeed steep selling was seen before the week close. We stay bearish on Euro Aussie dollar and expect a revisit of the 1.1694 low soon. Meanwhile, the Dow's strong rise last week firstly ruled out a head and shoulder top or triple top scenario, and risk markets are set to continue, with the Dow heading back to a 13,297 high. The S&P 500 is also seen heading back to its 1,422 high. The dollar index break of the 82.73 support confirmed short-term topping. So based on the overall outlook in the different markets, a risk rally will benefit the Aussie and Canadian dollar as well as sterling. Meanwhile, we'd expect the dollar to stay pressured in near term, including against the euro. So instead of preferring to short Euro Aussie dollar, Euro Canadian dollar and Euro sterling, would now prefer to long the Aussie US dollar, short US dollar Canadian dollar, and to a lesser extent long sterling US dollar. That's long the Aussie dollar, US dollar, short the US dollar Canadian dollar, and to a lesser extent long the sterling US dollar. And to recap, this turn in sentiment started when the European Central Bank Governing Council member Nowotny raised the idea of giving the European Stability Mechanism a banking license again. In that case, the ESM could tap ECB funding, which would then increase its firepower tremendously. ECB President Draghi followed by saying straight out that the ECB is ready to do whatever it takes to preserve the euro, and he urged the markets to believe him. It will be enough, he reiterated. German Chancellor Merkel and French President Hollande then issued a joint statement saying that both countries are bound by the deepest duty to keep the eurozone intact and will do all that is necessary to preserve the euro. It's reported that in Draghi's mind, Europe's bailout funds could buy government bonds, in particular Spanish and Italian bonds, on the primary market, whilst the ECB could purchase on the secondary market. In addition, the ECB would consider more long-term refinancing operations as well as more rate cuts. However, it should be noted that Bundesbank poured a degree of cold water onto the idea on Friday and reiterated its opposition to the ECB buying bonds, describing that as problematic and not the most sensible instrument. It's reported that Draghi will meet with Bundesbank President Wiedmann earlier this week for negotiation, and the ECB will hold meetings later in the week. Expectation for the post-meeting press conference is extremely high, and Draghi must deliver. There are also a number of other important events this week. The Federal Open Market Committee will meet this week and most likely tweak their statement to reflect the deteriorated outlook. The chances of additional easing is low, and the Fed could hold its bullets at least until September, before releasing its new projections. Nonetheless, we also have other important data from the US, including personal income and spending, ISM indices, and non-farm payrolls. The Bank of England will also meet this week, and it's likely that the central bank will stand put. However, last week's release of weaker than expected GDP is raising the odds of additional easing, and should the bank act, a rate cut is the most likely result. And that's it for a more detailed analysis and daily updates on all the news affecting the Forex market. Join us throughout the week at www.forexcurrencytradingonline.co.uk. That's www.forexcurrencytradingonline.co.uk.